Dear students, we will do module 75. This is titled Types of Securities. So you have to remember diagrammatic representation of types of securities. So types of securities, it's divided into exempted from tax, then tax-free securities, then this is less tax securities, less tax. So three divisions, one is exempted, second is tax-free, third is less tax. So tax-free securities divided into two again, one is less tax commercial or non-government securities, less tax commercial or non-government, Second division is less tax government securities. Second is tax-free government securities. So this is the clear picture. Three types of securities. One is exempted, one is tax-free, one is less tax. Tax-free securities are divided again into two. One is commercial or non-government. Second is tax-free government securities. Now exempted from tax. These are securities whose interest is exempted from tax. These securities are not in existence now. That meaning government has issued or the authorities have issued this type of securities earlier, but now these are not in existence. Now tax-free securities, as I told you, it's divided into two: tax-free commercial or non-government securities, and second is tax-free government securities. Now tax-free non-government securities, that is securities issued by local authority, statutory corporation or a company, any company. If they are issuing a security, it will come under this category. Holder of the security gets interest after tax is deducted at the source. I told you TDS rates will be applicable. Issuing authority pays the tax for the security holder. Then process of finding gross interest from net interest is called the grossing. I have already mentioned grossing, meaning the shareholder is getting the net interest. So grossing is equal to this equation you have to remember. Always we have to use net interest received into 100 divided by 100 minus 30 or 10, whatever the rate of TDS, rate of tax. Now first problem we will do. A has invested rupees 1 lakh in 9% tax-free debentures of a company. What will be his taxable interest for the previous year 24-25 if the rate of tax deducted is 10%? Interest accrues on 1st of January every year. So here net interest, how much? 1 lakh he has invested at the rate of 9% into 9 by 100. Interest is 9,000. Net interest he has received. Now we have to do the gross. Net interest received is 9,000 into 100 divided by, here rate of tax is 10%. So the gross interest is 10,000. So you have to remember 10,000 will be added as interest under the head income from other sources. Now tax-free government securities. These securities are also no longer in existence. Tax-free government securities means interest is exempt under section 10 subsection 15. Now less tax securities, most common form of securities. The issuing authority has to pay tax on behalf of the security holder before the payment of interest. Now policy holder has to pay tax on gross interest. We have learned the grossing. Face value of the security and rate of interest will be given in the problem. So when we do the problems, I will explain more clearly. Now for second problem. Compute the income from interest on securities of Mr. A for the assessment year 25-26. 1 lakh 12% Punjab government loan. So gross interest is 1 lakh into 12 by 100. That is 12,000. Rupees 12,000. So here you have to remember. Now problem 3. So 12,000 is the interest. Problem 3, rupees 90,000 10%. Tax-free debentures of a listed company, rate of TDS is 10%. So net interest you have to calculate 90,000 into 10 by 100. Into 10 by 100, that is rupees 9,000. That is rupees 9,000. Now gross interest you have to calculate. It's tax-free debentures. 9,000 into 100 divided by 100 minus 10. So that is rupees 10,000. Because TDS is 10%. Whatever the rate of interest, it can be 10% or 30%. Now circumstances requiring grossing up of interest. This is an important point for doing problems. If it is mentioned in the question, amount of interest received, the amount is given 10,000 or 9,000 or 8,000 is received as interest, or it's mentioned net amount of interest received, or interest after deducting tax is mentioned, interest collected by the bank, that meaning then you have to gross that, and interest on tax free non-government securities, tax free non-government securities. Now important points. Interest on foreign government securities is not grossed up since no TDS is deducted in India. Foreign government securities. Now commission on the purchase or sale of securities is not allowed as deduction. Some problems we will get that commission charged. It is not allowed as a deduction. For a dealer in securities, income is taxed under business or profession and related losses and expenses are debited to profit and loss account because it is his business or profession. Now, if securities are held as investments like ordinary people, profit is taxed as capital gains under section 45 and any loss is adjusted against the selling price. Now, assessees eligible for exemption on interest on securities. A local authority, an approved scientific research association, a registered trade union, members of scheduled tribes living in tribal areas, public charitable and religious trusts, political parties, a non-resident of Indian origin, and securities and bonds were issued before 1/6/2002. Now, interest on Indira Vikas Patra, Kisan Vikas Patra, National Savings Certificates, 8th issue. This is what we will get as from the government. Sometimes salary arrears, government employees will get this. So, interest on these securities is taxed under income from other sources on the accrual basis, and it is paid only on the time of maturity. When you see this National Savings Certificate, 8th issue and all, you can see the back side. Whatever the interest accumulated every year, they are not paying annually. At the time of maturity only we will get. So you have to remember this is taxed under income from other sources. So this is what I wanted to explain in this module. Theoretical aspects are important. Happy learning. Thank you.